Welcome, everybody. It's your boy Kid in his house. Trader Roundup. What did you learn? Do you have follow up questions? You know the assignment. You're hearing what it is, what it's about. I'm here. We are recording this to give you a platform to ask questions. What did you learn? If you did not watch ICT's lesson just presented, pretty please don't bother coming up. We're here to talk about one very specific thing. Trader Roundup, what did you learn? I presume you, the listener, are curious to know what you just watched or you want to talk about it. That's the only reason why I'm here is to talk about FX for a living. Let me get him as I would love to have him co host with me. FX for a living, come on up here, buddy. We're just here to talk about ICT, and it's your favorite topic, as is mine. Drunk Monkey in his house. Would love to get him up here too. Very, very intelligent man. Very fun chatting with him. I'm here for one reason only, and that is to offer the platform for you. We are a recorded space. I do believe, as you know, Michael will listen. He's curious to know your thoughts, your 2 cents. And we want to be that platform. We want to provide that feedback loop. So if you're here, I'm not really here to talk. I'm here to host. And I would happily co host with my boy FX for Living, who is a very good friend of mine, David. And I want to first off, welcome FX for Living to Trader Roundup. What's going on, brother? I can't hear you. Can you guys hear David, my boy FX for Living?
Hello.
Hey, buddy, what's going on?
Hey, good morning, man.
Bro, I love you and I want you to know that. I
Yeah,
want you to know that.
I love you too, man.
I
Hope
really,
you're
really do.
hope you're doing well.
I'm doing great. And just like watching ICT and creating this, this feedback loop. I mean, we've got 3 years strong, and you know this, that the mentorship, ICT's mentorship, he has offered some form of gem, some form of nugget, some form of I would even call it an Easter egg for folks who really want to watch that engage with him. Unless they find us, they really don't understand the full picture, right? Because of how much ICT is incorporating the community's feedback into his mentorship, right? I love it. And then FX for Living, David, bro, you and I have had the opportunity of actually trading together, trading some of the age old kind of forum days kind of information, right? I mean, dude, you and I both know we're both like, do you remember in 2014 when we found this in the in the Baby Pips forums? Like you and I have gone over some historical archives of Michael. Have we not? Like just with love, you and I, many hours.
Yeah,
You want to talk about that a little bit just because I want folks to understand how much you love and are passionate about ICT and how he's really helped you unlock your vision with the markets and where and how you try and really present that clearly through the tools and through where and how you explain price, right? As an adjunct, same way I do as what ICT is actually teaching through his YouTube channel. I feel very much that you and I are duplicitous in our efforts, right? With our heart, with our intentions, and with what we're trying to do. So I really like that you get to come up here and hopefully really shed a little light on your story, on what you're all about, and your thoughts and 2 cents on what Michael had to share.
sure. I mean, at first it sounds like, when you listen to ICT for the first time, you're like, "Oh man, that sounds complicated, isn't it?" Like at first when you like first like hear it for the first time, it's like, "Oh shit, man, that sounds very advanced, like but in reality, I think it's like pretty simple, it's pretty simple approach. It's like it's just because you don't know the language at some point when you don't really know the language of what is created so far, like you don't really able to understand. But when you understand the language, like at some point, it becomes super clear and super easy to understand, in my opinion. So yeah, for sure. The first time when I listened, I was like, "Oh, it's pretty heavy, right?" And like some people can ask themselves, like, is it like true? Like it sounds like a big conspiracy, like it's sounds weird, But like when you investigate by yourself, like it always said, like don't believe me or whatever. Just go in your chart and go see if the things that I'm talking about are there. And if you do that work, like if you do that part, like and you investigate yourself, you're gonna see like, it's in fact pretty much there, right? And that's kind of like you how you unlock the whole thing. So,
I love that. I mean, for us, we know the importance of previous days highs, previous days lows. Some of the very classic fundamental things that ICT talks about within algorithmic trading and high probability trading, where midnight's at, where 1800 is at. What's price doing in its journey as it's creating these ranges, as ranges are propagating as well as mitigating, right? And honestly, we're talking about the ease of trading today. And I want to get back to exactly what ICT was talking about. And I want to get back to exactly what the YouTube channel was offering today. And I want to give you, the listener, you, the speaker, you, the listener, the speaker tag, and an opportunity to ask the question on record. What feedback, what questions, what have you learned from Michael in this mentorship? So, FX for Living, I want to bring it back to you real quick as we take it around the room. And I wanted your take on what you heard from Michael today, the importance of really simplifying things.
I'm not
I
quite
mean,
agree with you. Sorry. Sorry.
Iman, just go ahead and go on mute real quick. We'll come to you in just a minute. Okay, buddy?
what I did like the most, to be honest, is like the layout he's using, right? Like the 5 second, 15 second, and the 1 minute. Like these are the probably the best way to see the market in real time, like how it actually deliver. Uh, so for me, that was like, the thing I like the most on that specific regard.
Yes, I know you very much love the lower time frames. Again, you and I have had lots of conversations about this. It's kind of fun.
But
So,
but
and
like that specific layout, like you have like three at the same time on the same monitor. You can monitor the 1 minute and you can see like literally the operation, like somebody like that likes to look at the whatever, how do you call that? Like the bubble thing or whatever. Like, but it's better to see it in the candlestick format, in my opinion.
I like that. What were your thoughts on ICT providing very unique and specific specifications on how to enter a trade within an inefficiency? I thought
Great.
that was fascinating.
Yeah, it's pretty good, man. It's pretty good. It's pretty good.
I mean, where to put your stop is really key, and the relationship between the candles, candle one, candle two, candle three within the inefficiency, and his instruction to you, if you were paying attention, where do you put things? Where does your stop go? I want David. We want you and I to invite the community to engage with any questions that they've had.
Yeah, for sure.
And I kind of want to go around the horn. Iman seemed to be boisterous. Did you have questions with the lesson today?
Yes, I have a question, sir. Can I talk about this?
Yeah, I can hear you. Is your question relevant to today's lecture?
Uh, what's the my rule on this site or platform community? I
I can't hear
wanted
you,
to
bro. I can't hear you.
I wanted to know this uh, information for
I don't know
my
what he's saying. David, can you hear him? I don't know what he's saying.
No, it sounds muffled a little
Yeah,
bit.
Iman, I can't hear you, bro.
So
I need your
so
help. You get clear very quickly or we move on.
Yes,
maybe
I
the microphone is just covered. Oh, I think it's great now.
sir,
Go
I
ahead.
wanted to know.
What's the position of this community have I own? I wanted to know. Can I have any money in there or nothing?
No, get the fuck out. Why are you talking about? Who's talking about money?
Yes.
Who's talking about money? Asshole.
Okay. Sorry, sir.
I'm confused.
Yeah, bro, Iman, do you have a question about ICT? No one's talking about money.
Yes, yes, sir. Carry on.
Okay, then pretty please ask the question. I understand English isn't your first language, and I want to afford you the opportunity of trying your hardest to ask a question if you have a question.
No, I haven't
You
any.
okay, then don't take the fucking speaker tag, dickhead. No one wants to hear you talk. We're not here for Iman, okay? Fuck. Brima. Brima, go ahead. You raise your hand, brother. I'm here for you. Brima, you're talking to a muted mic.
You guys hear me now?
Yes, sir, we can.
Yeah, so I guess for me it's just a bit of clarification on how to trade, especially intraday trading.
Wait a second here. Is this like a philosophical question
Yes,
or did you watch the
it's
fucking mentorship?
I did watch. I did watch.
Okay, then what's your question related to the mentorship, brother?
I don't have
Come on.
I don't have a question, more of an addition. Like, does that count?
Bro, I love you. I love you. I love you. Why are we here?
Roundup for if I have anything that I learned and want to
Not
share.
just anything that you want, motherfucker. Not just anything that you want.
Fuck off.
Okay? Not just anything that you want. You started off completely incorrectly. This isn't for anything that you want. This isn't Burger King. We're all here for a reason. Come on. Align with that, folks. I need your help. This is a group effort. I can't have you show up and say, I'm coming up for anything I want. Okay? Pretty please. Pretty please. This is not for anything you want. What did you learn? What are your questions? We would like to utilize this recording as a feedback loop. It can be that, which means it can help you, the listener, you, the student, you engaging with the lesson. What doesn't help is you coming up to try to run this thing. That's not it. Okay? Pretty please. Michael FX.
Yeah, hello. Can you
What's
hear me?
going I'm here, buddy. Go ahead.
You're actually I it's a great privilege for me to be here. I mean, to be part of this group, I mean sharing my own opinion. Well, I just watched the video this afternoon and I was quite pleased with what I've been able to understand. Yeah, for the past 4 years now that I've been watching ICT videos, I think Michael has just repeated the same experience that he has been sharing over and over again concerning the buy stop, concerning the relative equal lows and relative equal highs. He's just shared the same idea again, and he did that on a micro. So, as an example for us for this week, and we all know that the trending day, I mean, the the day of trading is on Thursday. So, he has just given us the example, the roadmap on which we can all trade. I don't know if I'm making. Hello,
No,
can
you're
you hear
doing a
me?
great job, Michael. I value and appreciate what you're saying. I really do. I see you trying. I appreciate it. You're doing great.
Okay, so he has mentioned the liquidity resting above the highs, and he has shown us the the relative equal lows that is on a micro. So he did that on 5 minutes chart. He also went further to express more on a 5 seconds, and I think on a yeah. So he showed us what we can look out for trading. I mean, before we can get into trading, not just rush into trading, we're supposed to just look for all these signals, all these signatures. So, and yeah, this is just like how to
I know.
say.
I love that. I love that. He did reinforce looking at relative equal highs and relative equal lows. The importance of looking for these very specific price signatures pre-market within the
Yeah,
overnight session before
yeah,
New York hits. We are
yes,
trying to train our eyes to look to the left within the overnight session for where we see very clean equal highs or lows, and where
okay.
and how the explanation of why those equal highs and lows become a draw on liquidity, and where and how those are preemptive to whatever volume profile you could possibly be anticipating. That
Yes,
was one of his major points, I thought, today.
of course,
Would you
yes,
agree?
yes. I agree. Very much agree.
Okay, I like that. Cool, 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 cool. We are of agreement there, Michael. Um, Michael, I'd love to get a few other folks' thoughts or 2 cents, but I really value and appreciate you being here, and I really like what you're saying. So if you don't mind staying, maybe we can circle back around with you and get some more of either
Yeah.
questions or your thoughts and insights, buddy. Is that okay?
Yes. Yeah, that would be very much okay for me.
All right, brother. High five, man. Thank you for coming up. I appreciate it. And I appreciate you really staying on topic, right? It's difficult for all of us to be together to try and juggle, the unknown and coming together and trying to bring value. And more importantly, we just want to know, what did you learn? What are your questions, right? What's the feedback loop for where we're at? It's important. Okay. So thank you, Michael. I got Market Oracle here. I'll bring him up shortly. Upper Realm CDF. How are you doing, sir? You're on mute, my friend.
Good afternoon. I'm doing great. Good afternoon.
How's it going, buddy? I mean, we're trying this, immediately following the ICT, lecture. What are your thoughts and feelings on what did you learn? What are your questions?
I already learned whatever I want to learn through the video, and I'm trying to put it into practice. So I'm just here to hear more thoughts. If there is a case of more
Okay,
thoughts,
okay, which I love that, buddy. Do you think that you need to take a speaker tag to come up here and tell us that you didn't watch the lecture and that you don't have anything to contribute in the way of a question or what you learned from today's? Do you think taking a speaker tag to come up to tell us that was indicative to the conversation?
the time I take the speaker tag, I actually have something to say, but it's not necessary anymore. So that's the case.
Yeah, that is the case, buddy. Keeping the conversation going. Market Oracle, what do you got? Market Oracle.
Hey, am I audible?
Yes, sir. Pretty
Yeah,
please.
well,
Pretty please. We're trying to even want to do
of course,
this.
we
Come
are on
on.
a clock. Yep, we are on a clock. I understand that, and I like your approach of passive aggressive.
I'm
There's
not
costing
passive
very
aggressive. I'm
okay.
aggressive aggressive. There's nothing passive about me.
Well, there
If
are
you
many
don't
people
bring
who like to
value,
hear
you're going to
themselves
get the
talk.
horns because I don't have time to waste.
Of course, me as well. So, getting to the topic, what did we learn today? Well, the best thing I heard about, and the best thing I realized is that we do not need all these shenanigans um, like market profiles, volume, etc., which Michael has made clear time and again. And we have to have a, what do you say, cookie cutter approach, like Michael has reiterated. And one thing I have noticed over the time is that he is making things simple and relatively easier. Earlier, we
Yes, I
used to
love
juggle
that.
with
What
many
what
fair
did you
value
notice?
gaps.
What was brought to your attention that seems simpler today?
Well, earlier we were juggling with many concepts like new week opening gaps, new day opening gaps, and hourly highs and lows. Of course, these all our point of interest are really good, but we have to narrow down our focus. These are for when we are at a higher level of consciousness or at a higher level of understanding of the markets. Otherwise, you only need two things: where is the liquidity, and then you have to juggle, like how are we engaging with liquid, engaging with inefficiencies in while going towards that liquidity. So are we keeping those highs, are we respecting the highs of fair value gap or not if we are bearish, or are we respecting the lows of the fair value gap if we are bullish? So there are only two things which we have to consider while looking at the markets, and other things are like what do we say, complementary, and we have to add them one by one and do not have to fill our charts with all this stuff and be confused, like where does the market want to go. First of all, our base point, where does the market want to go? And today's lesson, I think it is more of an exercise. So we have to train our eye. That's it. That's what I wanna talk
I
about.
love that. I love that. That's good feedback. So you felt like today's class was really Michael talking a lot about where and how to train your eye.
Yes, these lessons over time can help us while we are reading price. So when I'm alone reading price and watching the tape, this what Michael has said about the price. Okay, first of all, you have to mark out where is the high, where is the low. Are these relative equal highs and lows? These are the things which over time starts echoing in our heads. Are you
Uh-oh,
there,
what
buddy?
happened? What happened? What happened?
Hello, do you
Okay,
hear me?
Market Oracle kind of fell off there. That's okay. Amir is here. Amir, what are your thoughts and 2 cents? What did you learn, buddy? Amir, are you there? Maybe not on purpose. That's fine. Opportunities here are limited. We're not here to fuck around. Okay. Just saying, you got an opportunity, you got a speaker tag, and if it's gonna not be utilized, not treated with
Hello.
respect, what's going on, buddy? Jump on in
Can
here,
you?
my fellow inclined friend, MBRC.
All right. I'm live. What the fuck? Hey, thank you for having me on
Hey,
the show.
yes, sir, yes,
Or
sir.
it's an honor. It's an honor to be on your side. And for me, the second time I listened to your podcast, and I just found out about ICT last December. Thank God.
Nice.
I was.
So, were you watching the lecture today?
Yes, I did.
Nice, good.
That's
High
why I'm
five.
here.
What do you got? What do you got for me?
Okay, okay. For me, I trade with the 15, the 5, and the 1 minute chart open, and I also look at the 1 hour of the gold price and the 1 hour of the DXY to keep things.
Okay, I like that. I like that.
And that's what I learned in the last year. 1 year trading, blow accounts, always live funds. But now when I find ICT, I'm a bit profitable. My eyes are getting adapted to watch everything cops that I learned from him till now. It's not much. I just at less than 10 of ICT model 2022, and I still have like 700 plus videos more to listen to study. But what I learned today was the relationship in the 1 minute, 15 seconds, and 5 seconds. How to watch the gap that has been formed, that is not coming back, that the wick is allowed to do some things, but it's not going up anymore, as a confirmation that for you to enter a short or a long. But that will be, I think that's for me, it's like a bit risky to do that now, because it's like it's going so fast. 15 seconds, 5 seconds. Come on, man. Be like,
No, but with
whoa.
the 15-second, the 5-second, why are you being instructed to look at that? Why?
No, that's what ICT is show us on his.
Yeah, but
On
why? Well, what's the value in doing that, in your opinion, buddy? Just curious. Why?
um
Why is that important for you as a student and or a trader? Why
no
is the lower time frame good?
because the stop loss is gonna be tight. You
Oh, I
have
like that. Good answer.
Good
yeah,
answer.
the stop loss gonna be very very tight, and your take profit will be much bigger. That's why, because you're aiming at the buy side or sell side liquidity on the 15-minute charts, and
I like that.
that's what I learned from it. I don't know if I get that good.
No, I think what you're saying is really good. Okay, so in recap, today what we really looked at a lot, what Michael was talking about a lot, was really simplifying what the liquidity paradigm. We call it
Yeah.
the liquidity paradigm. Why? Because it's really the only thing we're looking for to define our logic or reason for price to go from one direction to the other, right?
Yes. Yeah. 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 Yeah.
So directional bias, it's not coming from any type of, and he explained very clearly volume. Why is volume a hindsight indicator?
I don't know, man. I just
Because the
just
relative
started.
equals, the orders that are placed in the relative equals that are left on the chart are showing you where price is going to go.
Yeah.
And then the
Okay.
volume and those nodes are hindsight and where the orders were bought. That's what I mean. That was my interpretation of what he was saying.
Yep.
David, David, did you want to add anything, or did you
Yeah,
hear
for
anything
sure. Yeah, for
on
sure.
the
I
volume?
mean,
Because that's been a really hot topic, and I
I
really
mean,
thought he did a great
Yes,
job of
he
explaining
did.
that.
So I'm gonna
any
rewatch the video once again because I always watch it twice, and then the third time I make notes. So
Yes, sir. Hey, MBRC, I'm going to get a FX for Living's take on this. Okay, brother.
FX for living states. What is that?
Oh, I'm going to get his opinion on what we're talking about, my
yeah.
friend. High
Okay.
five.
Okay.
So
High five. No, I get it. We all have multiple languages we're following here. And I am reminded within the audience that I need to be patient in understanding different folks' accents and what people are trying to say. And I will
You're doing
acknowledge
your
that.
best.
It's very difficult up here. It's very difficult up here. It's not easy to discern all of the, it's not easy to understand, but I am trying. I will tell you, I try and we try together. So MBRC, let's let FX for Living bring in his thoughts and 2 cents, okay?
Yes. 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 All right.
so the things about volume is like it's already happened when you see it, right? So like how can you anticipate a move, or how can you like place yourself inside a move if it's the volume already happened, you know? So like
Yeah.
that's the distinction in between somebody that actually look at these candles forming as they form and somebody that looks at the volume when it already formed. That's a big difference. That's my opinion on that.
Yeah. Yeah. Thank you.
And that's what he said basically. He said that it's already happened. It's inside. Like it's
So you,
already done
so
basically.
we have to wait.
He's showing us in today's lesson where and how volume is a lagging indicator because of the high frequency, the extremely low time frames create such clean relative equals that then become the draw on liquidity. So the utility of volume becomes, again, per his logic in the liquidity paradigm in today's lesson, becomes a lagging indicator.
All right. Okay. Okay. This is a lot of stuff to digest.
Well, I do believe Michael's entire mentorship is a lot to digest, which is why
Oh, come on, man.
it's good to it's good to, as he is doing today, simplifying constantly.
Yeah.
How
I
do we
have
simplify? How do we
I,
make it easier? How do we make it the most succinct and consistent to talk about? And I believe that's what this year's mentorship, that's what every mentorship has been, is this very clear sense of urgency and knowing what is coming into the future and where and how the markets can provide, where and
Yeah.
how you, the listener, can pay attention, where you, the listener, all you have to do is conquer being an asshole, right?
Yes.
Don't
Right.
be an asshole. It's really that simple, which was something else was talked about a lot today. And simply by doing what? By utilizing what? Not a micro, or not a mini, but instead a micro,
Yeah.
right? Because it
Yes.
really is all about the skill set
I have
Yes.
a
and
question.
identifying things from the lower time frame is far more real time. And I think that's what was explained, right?
Yes.
I have a
Yes.
Personally.
question. I have a question for NBRC. So you
Yes.
said you are a new student from Michael. I want to know when and how you discover ICT and what was the first thing for you that's been basically the first spark or something that actually, when you saw the potential of that. I'm just curious,
Well, I discovered him in last December, and it was by a group of guys that trades live gold on the
Okay.
YouTube channel, and they were saying you don't have to pay for a membership. Everything is you can find on the internet, and
Okay.
they say they trade ICT SMC, and then is when I began to dig in. What is ICT? What is SMC? And that's how I came into his name. I didn't never knew who was Michael J. Huddleston. Never knew. And after that, I began to watch his videos, to make lots of back testing about his concept of
The 20
the
twenty
2022.
twenty two mentorship, you said,
Yes,
right?
yes, sir.
Okay.
And when I saw the data that I have collected, because I journal everything,
Nice.
then I realized I was having like the 9 of the 10 trades back tested were going good. So after that, I began to apply it on my LiveFound account,
Okay.
and I've been doing very, very good. So yes, and that's how I
So
discover him.
So you realize the potential by actually backtesting what he was teaching in the 22 mentorship,
Yes,
and you go in your chart, you find out that it was some kind of truth, and then from there you're actually developing on that.
yes, yes, yes. And so now
Nice.
I'm digesting all of his videos. I'm just at video 13 of 2023, but I'm trading like now for a year, and the first thing indicators I cannot work with that. So and then so on, I stumble constantly with guys that use SMC and ICT, and then I began to dig in. What is it? Who invented that? And so it's an honor for me to join this channel, to join you, to be part of the community. One love to you all. God bless you, and that you are helping, because it's harsh times everywhere around the world. I live in Holland, but also here everything is getting expensive, and the wages are not enough. But with this concept, you can really make a portion that can help you live better. Yeah, you can pay your mortgage. You can
Oh,
buy some extra steak for the food. You know.
yeah, help your ends meet, brother. I love hearing that. That's why we're here. That's what this is all about, being an extension. That's the energy. That's the purpose. I mean, it's worthy of spending your time and energy listening to these conversations because of what you just said right there, my friend. What we want to do is collectively, we want to have everybody come together with a similar energy. And when you do take a speaker tag, we want you to really try and come together. If you have a question, really take the microphone, take the speaker tag, know that you're talking to your mentor, knowing that you're talking in a lecture hall and you're talking in a living room.
Yeah,
You're talking and you have a voice, and that voice is being heard. There's a feedback loop within all of us conversating that really adds what we do. And that is a closed loop within the market. So if your job is to predict, then you need to be able to close that loop, which means after you take the trade, you have to journal it.
yeah,
And there's open loops and there's closed loops. What we are doing is closing the loop.
yeah.
Okay.
Yes, 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 bro. Okay, I say thank you, and maybe somebody else have more wise questions to ask.
No wise ever. We got several hands up, so I'm giving you a high five and a hug. David and I are FX
Yep.
for living,
Yo, one
right?
bless,
Much
man.
love, much respect. Thank you
One
very
love.
much. One
Keep
love. I love that.
keep journaling, man. That's the
Yes.
key, right?
Yes, I will.
So
Journaling is what it's all about. Honey,
Yes, yes, it really is. In the beginning, you didn't do that, but you
well,
will get
we're
better
all
in the
too good for
journal.
journaling. We know that, right? But anyway, MBRC, let's keep the conversation
All
going. Keep it
right,
flowing, my
let's
man.
go. Peace.
All right.
have a
Hunting
good day, buddy.
Have a
Hunting
good
Ticks.
day.
Yes, sir. Hunting Ticks, you're up next.
Hello, hello. Hi, everybody.
It's
Can you hear me?
10:50 macro, by the way. I like the time. Just thought I'd throw that
Yeah,
out there.
we
Go
love
ahead.
the we love the time. Hi, everybody. Thanks for having me again. So, well, stay on topic. Uh, what I found interesting today was like, yeah, about the first one after 7 a.m. and the way.
Are you're talking about Michael's lecture series, not just about something random that you want to talk about, right? Hunting
Yeah,
ticks. I just want to make
yes,
sure we're staying
yes,
relevant
I
on
do.
topic here. Nothing
Yeah, no,
passive about my aggressive,
no, no,
right?
no, 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 no,
Nothing
nothing.
passive
No,
about this
May,
aggressiveness.
may,
yeah, yeah, yeah,
may,
yeah, yeah.
maybe you can speak a little bit closer from the
Yeah,
mic
hunting
because
tick.
no
It's
Okay,
hear
no
you.
difficult to
problem.
hear you
Yeah,
as well, brother.
just a little bit.
If you
Thank
can
you,
hear
Dave.
me,
Thank you, FX for living. I appreciate the thoughts there. Hunting ticks. Pretty please
sorry
continue.
about this. So I was saying, yes, what I found interesting was the tip that he gave us about the first run on liquidity after 7 a.m. So that gave us like a good edge. Just wait for it and then target the opposite liquidity. So I found this pretty interesting. Uh, and also, what I find interesting is how to scale a position and manage risk and losses, and how to basically either add some more or how to remove. Um, how do you say this? Sorry, excuse my French. Or how to remove leverage from a position in order to scale it and to be able to manage risk properly. So that was the two things that caught my attention. But I'm gonna have to review this second or third time to get all the juice from it. But first watch, that's what I got from it.
Okay. Can you
I
guys hear
was.
him?
Did you guys hear me?
It's hard to understand.
Yeah, bro. We're struggling here, and we are an
Okay, I'm
audio
sorry.
platform.
I'm gonna fix my
I'm gonna guess you're using a
headset.
Bluetooth, and the first time we asked you to fix it, you did nothing. Am I right?
Yes, I did fix it. I did fix it. I tried to put my
Okay.
It's
because I
Well,
have
better
a
now.
headset.
it might be
It's
I
better
have
better.
a
now. I
head
don't know.
I have a
So
headset, so maybe
Yeah,
I'm
no.
gonna
The
use.
headset. Take the headset out. That means you're using Bluetooth. Don't use Bluetooth.
Okay. All right. Hey, give the let someone speak. The time
Yes,
someone
sir.
speak.
Yes, sir. Kev Trades, you're up next.
come on,
Keeping it
man.
going, keeping it flowing.
Yeah, what's good?
What's
So
good,
what?
buddy?
Yeah, so what I got from today was basically the crux of it is the importance of the liquidity in relation to the highs and lows of the previous session and using those for your targets basically, right? And the importance of time on the lower time frames and how with everything like that, the confluence, it helps you to one, have better entries and two, know where to exit the market.
I love that. I love that. Did you have any questions or concerns, any feedback? If Michael were listening to this within your studies, referring to, today, within, recent lectures, things topical, did you have any questions or concerns? Did you have
Um,
anything that you would be interested in communicating that he might hear in regards to your own
Well,
trajectory and understanding these concepts? And again, not everything we're talking about right now. Pretty please. So
well, to be honest, he has made trading a lot easier, simpler, where you can remove a lot of the noise that you hear in the crowd. And as someone mentioned earlier, it is somewhere where you can get information for free. He doesn't do this. There's nothing that you have to pay for. It's on his YouTube 24/7, and I think it helps anybody that is interested in learning this skill to be able to put themselves in a better position. And yeah, I have to give him his roses while he's still alive. So, you know, thank you, Michael. Honestly.
nice. Nice. Michael, FX.
yeah, I'm still
Did
here.
you Yeah, no, I see you took your speaker tag off. Did you want to add anything?
Yeah. In addition to what I said earlier, that concerning what I watched from Mr. ICT today, he has showed us the way forward. I mean, most of his teaching has put us has kept us in a place where we can be able to, I mean, improve on our skill sets. So the idea of the liquidity resting above, I mean, in at the buy stop, yeah, the liquidity resting there, and from there you can be able to see how you can, when that liquidity is taken off, then you can from there trade, then know your entry, that is the utmost trade entry. From there you begin to look for your fair value gap. Then from there you try to see where your relative equal lows are. So I mean that's the pattern which I've actually learned from him. Yeah. Thank you so much.
I love that. I love that. And I think that's very much what's being conveyed, right? So very, very good. I love hearing that. Continuing the conversation, ICT Titan. ICT Titan.
Hey, what's up, everyone?
What's going on, buddy?
Can you hear me loud and clear?
Yes, sir, we can.
Perfect. So yeah, I just watched the video by Michael. It was awesome. I got to see again through the importance of smooth highs and smooth lows, how we can anticipate the liquidity after attacking to one side and delivering to the other side. And then we also saw how the displacement works, and then we can go through the unclear fair value gaps to the clear ones by lowering the time frame from 5 minute to say 1 minute, then go to 15 second. Even we went to the 5 second and learned the putting stop loss by taking the first candle that made the fair value gap to the top by one tick, and then attacking to the other side to where the smooth lows. But again, he also conveyed that we can see a smooth lows, but there is obvious smooth lows. So he uh, tried to suggest us to attack or target the very obvious uh, smooth liquidities than the say relative a little bit by a difference of lows or highs. So yeah, it was very interesting to see how. But yeah, again, we have a yeah, we might gonna struggle with the putting stop loss by with those kind of, because the for that you need to have a perfect PDRA to, or the displacement that you are taking through the trade. So yeah, it was interesting.
I personally, the way he was telling us to look on the 5 second and the 15 second for equal highs and lows, for them to be taken, and then for price to turn around and go drive to the other side. So sell side to buy side, sell side to buy side. And these high frequency time frames are where you can train your eye to see the relative equals. And the liquidity paradigm that he is reinforcing, he talked about within the book how and where you can get daily bread from macros. So when you're really looking at reinforcing the why do we look at a high frequency time frame? Why are we looking at 5 seconds, 15 seconds? Why? We're looking for relative equals.
Yeah. What do you mean by relative equal? If I'm not
No,
because
the smooth highs and the smooth lows, right?
oh,
When we
okay.
say relative equals, we're saying smooth highs, smooth lows. And when you draw a line across them, you see that flat path, and you see it the lower the time frame, the clearer you can see how flat that line can come from. And you can connect point A to point B, and that becomes extremely flat. When those lines, that level is flat, then we commonly see the algorithm attack those relative equals.
True, true, true. Yep. And I also have a question to the community if we can go through this topic. It's about the today's scenario.
Yeah, no, you've done a great job of addressing the question in the lecture at hand. And if you have additional questions, pretty please, I have my co-host for FX for Living, David, who's very, very much someone I've traded with, very, very, very much familiar with ICT concepts, and he loves trading these relative equals on an extremely low time frame. He's very good at it. If
Yep.
you have questions, pretty please bring them. We're here for it.
Yeah. I want to talk about the HRLR, the high resistance liquidity run. That happens when the market is in a very high resistance. Oh, what is the sign that we can know that okay, now it's ending? Because I know it's as ICT told already that HRLR situations is very frustrating to the traders, and he said that yeah, avoid that. But when to know that it's getting clear now and moving to the another phase? So that's my question to the community or anyone.
Oh, that's a great question. How to identify a high resistance liquidity run versus a low resistance liquidity run? When we refer to a low resistance liquidity run, we think of speed. When we think of speed, we think of multi time frames aligning. We think of a convergence. We think of harmonics. We think of price just boom, moving, right? So we have very nice, clean multi-time frame runs of price. And then we have these very, high resistant, very difficult consolidations where you could be looking for price to do something, but it just isn't performing to the characteristic that you're looking for. And as ICT is taught in Elements of a Trade Setup, Core Content Month 1, what are you looking for? What are you looking for? Consolidation? What else?
You talking about the
We're talking about the elements of a trade setup, core content month 1, and we're talking about 4 specific movements in way price delivers. We're talking about a consolidation. What else?
manipulation,
Okay.
distribution.
Okay. That's so we're referencing AMD here more so than simply the phases. David, you want to jump in here? You want to help him out a little bit?
So most of the low resistance liquidity runs gonna happen internally, so meaning inside the range, and most of the external, most of the high resistance gonna happen on the external side of the range. So like it's just internally. So if you look for internal delivery, you want to look for inefficiencies or imbalance inside, and most of the time, that's where you're gonna find out your smooth highs, like your very, you know, smooth highs basically, or smooth lows. It's gonna be internally. Just
So,
my opinion, right? So
so
I
my
like
question
that's
is like,
that's another good take. I wasn't
yeah,
thinking of that, but internal liquidity versus or internal range liquidity versus external range liquidity, the IRL versus the ERL. And those are going to be the relative equal lows, above or outside of a range, your external range liquidity versus the range that's formed with the relative equals that are left within the range. So anyway, thoughts, feedback, your questions. What did you have? What did you learn? Oh, well, we have some feedback here. We have some very good feedback here. But just we'll wait, everybody. Pretty please.
Can you hear me?
Yes, sir. We can.
Good morning. How are you guys doing?
Fantastic. We're really trying to follow up with the classroom today, sir.
I wish I would have known this. I only checked it out because someone replied to me saying spend a little bit extra time on your space right now. I'm like, wait a minute. What today is
Well,
Tuesday?
it is Tuesday, but even per like some of the emails, so check your emails. I'm definitely emailing you, so pretty please. But I am trying my best just to follow up to just again follow the assignment, get feedback from the community based on what you're asking, right? So we're here, and I got my boy David FX for Living helping out to try and answer questions. But there's nothing better than the man himself here, so that's what it is, buddy.
Obviously.
The fellow that just made a request or comment and posed it to the community in regard. This is what I thought I heard because I'm walking around the house grabbing blueberries and getting ready to sit down and listen to more of y'all.
Nice.
But I heard, and I may have misheard, but I thought he asked, how do we know when a high resistance liquidity run condition is no longer a high resistance liquidity run condition?
Yes,
Can
sir.
he confirm that's what
That
that
is
was? Or
indeed exactly what I heard as well. David had his take on it. I had mine, but that is 100% what I heard as well, Michael. So if you
Yep.
have a take on
Yep,
answering it,
that was
okay, give me a second here. The answer to that is number one, knowing where the market is likely to draw to next. Because if it's an obvious pool of liquidity or a single high, relative equal high, a single low, or relative equal low that the market has not spent time gravitating towards or traded to, or for instance, like we used today, which was the regular trading hours opening range gap high and low level from last Wednesday. That it was such an obvious, and it's again one of those things I have on my notepad. I go through and I look at the last week or so of trading. Any relative equal highs from all time frames down, I go through all of them. Like I'll look at weird times, like the 17-minute. I'm looking for refinement of specific price levels. And I like what you said earlier, Kit, where you said that the lower time frames, it does in fact help you zero in on levels that you wouldn't otherwise pay much attention to on a higher time frame. Like for instance, say like the 10 minutes real popular and 15 minutes real popular, or 20 minutes real popular. If you only limit yourself to that time frame, you don't really get the benefit of seeing sub time frame that's whatever you're saying that's your lowest one. Going down to these ultra sensitive smaller time frames really ferret out these clean levels that you don't see them booking price real close to each time and stopping and not going to it because it's masquerading behind the big candle on a higher time frame, whatever it is that you're using, whatever instrument it is. So by having the clear draw of where it's likely to go, premise linked to a higher time frame, that means a new week opening gap, a new day opening gap, opening range gap, regular trading hours opening range gap. Those are primary, easy. They are always going to be able to be seen in the chart. They cannot hide them from you. The previous day's high, the previous session high, the previous day's low, the previous session low. What's a session low? The time frames I told you to look at intraday. Whatever the highest high and the lowest low are, they're all pertinent. They're all useful. They're salient to what is likely to be used as a next draw on liquidity. The key is knowing which one it just utilized. What did it just use? Did it go to an old high and rip through it and come away from it and start becoming weaker, heavier? If it's done that, first thing is where's the next opposing liquidity? And if there's an obvious clear-cut inefficiency before getting to that extreme or counterparty, then it's likely to go to that more so than the liquidity. because it may go down there and just go into a consolidation. So if there's an obvious inefficiency before you get the opposing liquidity that you're trading within, in other words, let me paint it this way. Let's assume for a moment we use today's NQ's price action. It'll be a lot easier for you all to follow what I'm doing and what I'm conversating about. The 7 o'clock hour this morning, I gave you the 25, 405 and 3/4 buy side liquidity, and then 25,326 and 1/4 sell side. It ran the buy side first. Going back through that run prior to it reaching up to the high formed at 7:56 a.m. Eastern time, thus clearing the 25,405 and 3/4 buy side. Going back to the left, there isn't really any real significant inefficiencies until we get to the buy side and balance sell side efficiency at 7 o'clock a.m. So look how quickly it ran right down into that. It was like a straight beeline right to that. Then it caused that little tiny, like a hiccup, a consolidation. And then it resumed the run on counterparty. It absorbed all the buy side. So shorts are in smart money's favor because they cleared all the buy side. So the ideal scenario for them is to get out below sell side. This is when you anticipate low resistance liquidity run conditions. It will remain that way until the opposing liquidity is taken out. Either it consolidates there or it reverses. If it reverses, you want to see clean price runs where every down close candle, if it's moving up, every down close candle supports price, treats it like a trampoline, gets into it, runs higher. Every buy side and balance sell side efficiency has to stay partially open. If they're closing every single one of them, you're entering potentially a consolidation, or it's going to move into high resistance liquidity run. The clearest, easiest textbook definition is high resistance liquidity run conditions will remain in place until an obvious new draw on liquidity is determined. If it's not obvious on the chart, if you can't see it clearly, don't do anything. If you feel like it's going to go to a specific high or low, or a premium inefficiency or a discount inefficiency, thus giving you some kind of a draw where it likely will go to next, then you have to weigh and measure what is the candlestick delivery doing. By having an open, high, low, close candlestick, you're getting a better read than order flow, depth of market, all that other stuff, because the candlestick will remain open. It won't close inefficiencies if it's bullish or bearish. In deference to direction, let's assume for a moment you think it's going to go lower. The sell side and balance buy side efficiencies, they should not see a full overlap in the upper half to its highest point. If you start seeing these stay open a little bit and price is still gravitating, moving lower, you are in, by definition, a low resistance liquidity run condition. If you're seeing gaps get closed immediately and then the candle overlaps that gap and spends a lot of time in that same area, that is not low resistance liquidity run conditions. It's high resistance liquidity run conditions. So low resistance liquidity run conditions reside in markets that are both determining a clear draw on liquidity, where it's running to stop out somebody. Okay, who's the next victim in the room? And this is the key. Okay, you have to have both of these. Just one ingredient isn't going to bake the cake. You have to have the delivery in candlesticks showing a willingness to have, when bearish, up close candles. Support the idea of lower prices by repelling price away by going into it just a little bit and then sending it lower. That's a bearish order block. Any sell side and balance buy side efficiency when price is bearish needs to indicate some measure of that SIBI staying open in the upper half, not fully closing. But here's the caveat, as I mentioned today. It can go up immediately, fill it in, and that's immediate rebalance. Then absolutely you're in low resistance. The next candle is going to start delivering like rocket fuel, and you just stay with it. Put the trade on, put your stop on, walk away if you have to. Don't be nervous about it. Just let it do its thing, because that is the strongest PD array I have. That's the number one Mac Daddy that you're on side. It's going to deliver. Speed's coming. The direction's right. You just simply submit to it. It won't feel comfortable. because it looks like, oh no, that I was expecting this to become a fair value gap, and look, it's already came over top of it. Ooh, that's exactly what you want to see if it's going to be immediate rebalance. It ain't going to spend any time waiting around to go down a little bit and then come back up to that fair value gap. It wants to do it right now because it's got no time to be wasting. Gone. That's like a billboard sign for smart money saying, yep, it's getting ready to come right now. Does that make sense?
That's awesome. Thank you, Michael.
That, that's a lot of gems. Holy.
Yeah, thank you.
Awesome. I'm listening, guys. Continue.
Good news is, folks, this is recorded. So the gems, they are dropping. Let's keep it going. They are dropping.
Man.
I love, we talk about SOPs is how Michael referred to it, which would be a standard operating procedure. We utilize the term specifications. And I just keep seeing repeatedly, time and time again, within this mentorship series and within our conversations here, where and how you, the listener, are able to extract exactly that. What are the specifications? What are the operating procedures? What are the if then logical decision trees that you need to make in order for you to make a legitimate decision on these charts? Keeping the conversation going, keeping it flowing. Thank you so much for being here, each and every one of you. Boog, Boog MVH, and then my boy Market Oracle.
Yo, can you
Yes,
hear
sir, we
me?
can.
Thank you, Kit, for the opportunity. It's my first time here, and hopefully the man himself is here. So I must show my being thankful for everything, for changing
Yeah,
my life, and for the
and Fight
community.
Club, we understand. Yes, sir. Pretty please.
Yes, thank you. So what I have noticed today, and as a reminder for my journal, is to never delete my key points, my key levels from the charts, even though the price has already traveled through it. And the question about the very low time frames, I use the very low time frames as the 30-second, the 15-second to confirm my PDRAs and to see the most obvious signatures in price on the PDRAs. In example, if I see a 15-second change, respect the consequent encroachment of the order block on the 1 minute, that's my confirmation. And as the man just said about the immediate rebalance on a 1 minute, on the 15-second, it will be an institutional entry flow, order flow. So I use the very low time frames exactly for that, for confirming my entries.
Beautiful. Did you have a question by chance? Because here's the thing, I'm
But
really imploring, if you guys are here and if you're listening, you have a very, very good piece of information here available. All you need to do is provide feedback. And if your question is valuable to the community, it will be answered. So I just ask that you implore, don't just raise your hand to try and come up, really dig down, look in your journal. Do you have something that you've wanted to talk about, that you've had a question? And pretty please, I hope it's topical to something that we're dealing with in regards to the mentorship. Okay. Those are what
yes,
we're asking for from you, the listener.
okay, thank you, Kate. My question is the very low time frame a good confirmation for entering price in accordance to the levels on the 1 minute or the 5 minute order blocks or fair value gaps?
Beautiful,
If
beautiful
I see the
question.
fixed,
And I will answer that quickly and say yes. That's what all of this has been about. For you to be able to prove and demonstrate that to yourself. Excellent question. Keeping the conversation going. I got Batman here, guys. We all know
Hello, guys.
Batman. We got Batman here. We got Market Oracle. Market Oracle's had some good questions. My boy CB in his house. Lots of folks wanting to speak. I'm going to
Hello,
ask.
everybody.
Okay,
Good
jump in here,
evening.
buddy.
How you guys doing? Good morning.
Pretty good.
Um,
What do you
I
got
have
for
a
us?
I have a specific question that I've been battling with daily on these charts.
Okay.
And it revolves around discipline. So,
Oh,
for example, today, right? Relative equals lows was swept. Asian low was swept inside of a 4 hour busy, and then we had that displacement at the 950 macro, right? I entered trades based off of fair value gaps, and I was waiting for a retracement down into this 950 fair value gap, typically the 952 candle, but it just missed it by a couple of ticks. Now, my question is, I knew where the draw was going, the pre-market high that was formed at 7:31 a.m. I knew where price was going, but I'm battling with discipline, rather waiting for price to trade inside my fair value gap for the entry, or just pulling the trigger and just sitting in the trade. So when it comes, my question is basically, do I stay disciplined and just miss the trade if price doesn't enter into that fair value gap, or do I just pull the trigger and ride it out?
Well, let me ask you this. It's a good question. How would you answer that, asking yourself the question within the community? How would you answer that yourself if you heard someone else asking? Just out of curiosity, brother.
Um, See, I'm kind of appalled by that because
Oh, shit.
if you know where
Appalled.
the draw, if you know where the draw on liquidity is going, right? It was going from a buy side to sell side. It was very obvious this morning. Um, Part of me is telling me get in a trade and just manage the trade, but it's the devil on the other shoulder that's telling me be. Well, I wouldn't say the devil, but my other shoulder is basically saying be disciplined, wait for the entry, wait for price to trade inside that fair value gap, and then enter the trade. Um, so I'm it's really 50-50 in my opinion. That's why I want guidance from people that's
Uh, uh,
better than me.
Understandable. And you're
Mhm.
asking good questions. Would you say then with your question that you would need more confluences within whatever trade idea you're looking for?
Um, Not really more confluences, but I've battled with, like, recently my discipline wasn't where it's supposed to be, and I paid for that.
Well, what
I
do you mean
paid.
when you say you're not waiting for relative equal lows to be taken? You're
I'm basically jumping the gun too early. I'm jumping
That's
the gun too
common. That's
early,
common.
and I could get a better position to manage my risk better.
Okay.
Guys, can you hear me?
Yes, sir.
Yes.
If I may, this is what I hear. I heard that the uncertainty, the unwillingness to act when he feels like he should. I think that there's a deficiency in what defines a point of action,
Hmm.
and also what is it that would have made these transactions easier for you, because you used the very thing I was waiting for a break in both of you speaking. I was going to come in and say it could go either way. It could go 50-50. Now, what do I teach in regards to probabilities? If you can see both sides of the equation being bullish or bearish, what does that mean?
It's not probable. It's low
Right.
probable.
In honesty, do you find yourself knowing that that's likely there, but your impulsiveness makes you want to still engage because you feel like you want to be doing something and you submit to that instead of being disciplined and not do it?
Not necessarily, because there's been examples of me not entering and price runs to my intended target and I just don't capitalize on the trade. But then there's other instances where I get in a little bit too early, and then um price price either runs inside my fair value gap, or I'm wrong in general and I lose on the trade.
When you enter early, what is it generally the catalyst that puts you in early? Like, what are you acting on that isn't there yet in the chart?
I'm acting on basically predicting where price is about to go.
And
Um,
you're not waiting for a defined entry. I just want to be on board because I
mhm.
might not be able to do it. Is that what you're saying?
I'm sorry, say that again. You broke up for a quick second.
Is it that you're trying? Okay, in other words, you have a very strong conviction about where it's going to go. So you know where it's going to eventually try to get to. So your draw, you're confident in that.
Correct.
But do you find yourself just not being willing to wait for a clear, defined PD array to act on and define the risk? And to overcome that, you just simply just plow in there. I'm on board. I'll weather whatever hardships come because I know it's not likely to reverse. It's going to get there. It might be a bumpy ride getting there. Is it kind of like that mindset that's putting you in it?
Correct. Exactly. Yep.
Okay, so now you just narrowed down your opportunity. What you have to do is you have to come to terms with, yes, I believe strongly that this is where the market's going to go. I believe it's going to get there. I'm willing to submit to it reaching for it. But now I have to find where is it that I'm going to enter? What methodology am I using? Can I ask what it is that you usually try to employ when you do it? Like, what is the PDR you trade off of? What's your entry model?
Fair value gaps.
Okay. So are you not seeing the fair value gap on the chart yet? Or are you seeing the fair value gap and you're not waiting for it to retrace back into it, then repel price in your favor? Like where are you at in the spectrum of, is it in the chart or it's not there yet?
It's in the chart. It's in the chart. I'm just not waiting for it to trade all the way into the fair value gap.
So you're opening yourself up to a larger measure of drawdown for fear that it may not trade to it and then you miss the move.
Correct.
Okay. That is an easy thing to overcome. Number one, you have to spend more time collecting old price runs. Go back through the old data on hindsight and see how many times fair value gaps do the very thing you're fearful of. It's rare. It's very, very rare. But when you're new or you're inexperienced with using these concepts, it forces you to feel like, I know it's going to go there. I know it's going to go there and it's going to be real fast and I'm going to feel defeated because if it goes there and I didn't get in, I failed. That's not failure. You had the draw right. And when you go in your journal and you say, I got this right. I didn't have the opportunity and experience yet to participate on the entry because where you're at in your skill set and your development, there's nothing wrong with that. You cheerlead yourself. But what I think you're doing is you're being extremely hard on yourself. And as men, we do this. You're expecting to be perfect right from Jump Street when you have enough to know where the market's going in your favor, where it's going to reach for. There's potential, there's profit there if you capitalize on it. So what you're fearful of is you haven't seen it enough times do the very thing I teach that it does. And that's just a matter of submitting to hindsight data, not trading, then tape reading, watching it. That's the key. Not entering on a demo, not doing a combine, not doing an evaluation, not trading a prop or live funds. Submitting to the idea that I'm going to watch this and I'm going to read every single candlestick as it happens. I'm going to watch every ebb and flow and tick that creates and watch it breathe and come into existence. And then when it expires, it goes to another candle. You submit to that uncertainty of what that next tick is going to bring. How is it going to work with the previous candles? Is it going to go back up into up close candles when it's bearish? How much does it go into that up close candle? You need to train yourself to feel that uncomfortable uncertainty. And then what happens is you have adopted a new mindset that's alien to you. Don't even, you might agree with what I'm saying, yes, it makes sense. It doesn't make any sense to you. It doesn't really make sense to you until you go through it and you submit yourself to it and you see that the benefits of having done so. You're not shaken. You're not rushed. There's no reason for any of you to feel like if I got an idea where it's going to go, I have to get in. I have to get in right now. Because if anybody else was saying that, and you have conquered this issue that you have right now, that's easily fixed. It just takes a little bit of time and effort. You'll get past it. But if you heard anybody else saying that, you would be scratching your head saying, bro, what you're doing is you're just impulsively jumping in because you're afraid to miss the move. You're chasing the dime and not the rhyme behind why that story is going to unfold. You're not letting your model dictate your actions. You're trying to be smarter and faster than the model you are supposing you're employing. You're only using half of it. So if you go into battle, okay, and you run out there and you have the best of a sword and the best of a shield, and it's time to go out and fight now. It's time, and you run out there, but you brought your sword, but you left your shield. How effective are you going to be? You're going to be able to thwart every attack and parry everything that's given to you? No way. You're going to get cut up and someone's going to get you. You have to have a shield. The shield is your self-control, your risk management. You have to define that. You have to know what that is. By you not waiting for the fair value gap to actually trade back up into it, you have an uncertain amount of risk that you're fearful of, which compounds that necessity about, I need to be in there. But you're admitting that, subconsciously you're doing this, by the way, you're admitting that whatever this trade does in pain, I'm going to take it. I'm not a wimp. I'm not going to tap out. I know it's going to go there. They're not going to shake me out of it. I know it's going to go there. Now apply that same measure of conviction. If you waited for price to get up into the fair value gap, know exactly where to place your stop loss at, and then hold that same measure of confidence and conviction once the model presents itself, and then you submit to the whole delivery when it runs there. That is better than sex. It's better than anything else out there because you have conquered yourself. You've conquered your fear. You conquered the uncertainty. You conquered what if anybody really knew what I was feeling while I was in this? And if they knew how I felt right before I pushed the button to get in, even though there isn't any real entry in there, you would feel ashamed and embarrassed. It removes all that stuff. And you feel empowered. You feel strong. You feel centered. You feel balanced. You don't feel any kind of impulsiveness. And I went through a lot of that in the beginning. I went through so much of that. And I wish I had what I'm talking to you with, because I would have immediately implemented it and I would have stuck with it. And I would have said, this is the way to get there, because there is no other way to get there, because there is no other way. You continue to keep doing what you're doing, nothing's going to change except for the greater measure of uncertainty, regret, frustration. You're pushing your target of consistently profitable farther away by doing what you're doing. Can you see that?
Yes, I can, sir.
Okay. So now that you have a plan of action and what to do, it's up to you whether or not you're going to submit to it. If you don't do it, nothing's going to improve. It's going to get worse, because you're going to have more time doing this, which is not following the model, which is not doing what it is that you know you should do. But because we're like cavemen, I'm going to get in there right now. I feel like I got to just get in there and do it. When you have to remind yourself there's rules. There's rules you have to engage. There's rules of engagement. And by waiting for this clear advantage is what it is, you know why you're entering, when you're entering, and how it's going to afford you a measure of risk that you're easily accepting. Because your stop loss, if you enter with a fair value gap, is going to be way less in terms of stress and monetary risk, because it's defined by one tick above candlestick number one, or below the low of candlestick number one if it's bullish. But you have to submit to old data, trick yourself into thinking that you gained that experience by doing it by your annotations in your journal. Talk it up. A lot of guys don't want to do it because they think, oh, it's a fraud, it's a scam. It's nobody's going to get anywhere by doing it. I'm telling you, every one of my students that make millions of real dollars did this, and half of them resisted me in the beginning. I can show you if they were honest and said, hey, let my emails, let my letters I mailed to you, video conference calls, let that come out publicly. And you would see them crying, weeping. I hear you say it, but I just don't do it. I just don't do it. And I said, when are you going to do it? Because I can't make you do it. Kid and the rest of the community can't make you do it, man. None of us can make you do it. But you have to realize that what you're resisting and not willing to put yourself in the winner's seat the right way, you're the one at the wheel. You're driving that. And the only reason why you're not getting there quicker and smoother is because you're resisting, because you want to do it a different way. Because your natural impulses as a man is, I know I'm right, but I don't want to miss the move. As if that's the only move that's ever going to happen. And that's the reason why I teach on these lower time frames, because there's so many opportunities to prove to yourself that you don't have to be right every time. You don't have to take every single trade. You don't have to force yourself into the trade to get that run to that draw liquidity you're so passionate and confident it's going to hit. It's easy to feel like you have to do more than what's necessary. And as men, we have to dial that stuff back. I hate to say it, but that's exactly the reason why women make better traders. They don't have this tendency to be right about it. They don't care. They're in there. This is what the rules say. This is how I'm trying to make money. The framework on this setup is this is how much money I can make. So where am I going to define the risk? Well, the model says this is where I'm entering. This is where the stop loss goes. How many contracts can I afford to trade within that parameter? They put the trade on and they wait. They wait. We have a hard time as men doing that because we have no problem standing in front of a moving train. I'll play chicken with a train all day long. It doesn't usually lead to a longevity in life, but we're willing to do that. And you're trying to stand in front of a train and say, okay, I'm going to anticipate this happening. I'm predicting the future. I know it's going to happen there. But now you're inviting the very toxic things of how much drawdown are we going to have to go through. And then what happens is any drawdown becomes exaggerated and you feel it bodily. You feel it. It's not just like, well, this is uncomfortable. No, you feel it. Your heart palpitations will happen. You'll start breathing heavy. And if there's anybody around you love and cherish, you're going to victimize them. You're going to be short with them. Don't talk to me. Or if you do talk to them, you're going to be mean to them because you think they're like a vampire stealing your attention, and that attention being stolen from you worrying about how much risk you're going to have to take on is going to now cause that problem in your relationship. And that compounds into what? Better, easier trading? No way. So what you're doing is you're in this vicious cycle that a lot of men go through. They do this thing over and over and over again. And go back to what was taught. You have to know what you're looking for and entering on. The benefit is it removes all the uncertainty of where risk is. It removes the wrestling match of, I have to get in right now because I'm going to miss the move. You don't fear that because you've seen enough of these happen that every single day there's dozens of these setting up. Dozens of them. And if you know that this is the frequency in which they occur, where's the necessity for you to just plow in there because I got to get in there? It's removed by that. So the common denominator is, and this is what I may be wrong, but this is what I'm hearing from you, okay? And you tell me if I'm wrong. It's okay. I can accept it if I'm wrong. I hear someone that's passionate about what they want to do, and they believe in what they're learning, but they're not forgiving enough in themselves to allow themselves to develop patience in a process through a protocol of action by utilizing the implementation of the fair value gap that you're trying. You say you're interested and you see them, that's your model, but you're not actually using it. So if you are not using it, it's not your model. Your model is chasing price, withdrawal, and liquidity. And hey, look, there's people out there that make money doing that. But are they comfortable? Are they living a long life and healthy? They got cortisol pumping through them all day long. Their organs and their blood vessels are getting screwed all up and their health is diminishing. That's what I did as a 20 and 30-year-old. I did that. And that stuff wears you down. And it's an easier way of doing it. And you have to let yourself do it this way. Here's the fair value gap. It's there. I cannot, in good conscience, call myself a fair value gap trader and utilize this as an implementation of entering, framing my risk, and then participating in that price run. I'm strongly passionate about. I know it's going to go there. I got the convictions that says that this is going to go there, but I can't enter until it goes in the other direction of where I think it's going to go. So I'm going to be selling short when price goes up. And I got to know exactly where that's going to end. That's the fair value gap. And I have to know exactly where my stop loss is going to be. That's one tick above the candlestick number one. If I get stopped out, I don't fear it because if it drops back down below the fair value gap and then taps the bottom of it again, I'm going to enter again exactly right there and put the same stop loss I put in before. If it stops me in, then I'm done. I start another trading day. Isn't that liberating? But we don't look at it that way. We look at it as we failed, we're weak, and I don't have anything to come to social media with. If they saw me do this, they would call me a failure. If I showed this to my wife, my girlfriend, my kids that are looking up at, and all these things, we compound that. We make this out to be something that's not. It's money. When you go to your job, when you run your business, you're doing the same things you did the previous day. You sell something, what are you selling? I don't know, whatever it is you sell. You're going to change your product because, hey, I'm a good salesman. Let me just try to sell everything out there. No, you sell what you know. You sell what you know. And in this model, if you're saying the fair value gap is your PD array, then you have to know that that's what you're implementing your entry on. And you can't do anything otherwise. You can't do anything but that. Does that make sense?
Yes, sir, it does. I appreciate it.
Not a problem.
So CB, just want to make it clear. How's it feel to get one-on-one mentorship from ICT on live social media? How's that feel, getting that one-on-one experience? How much do you think people would technically pay for that? I'm pretty sure the marketplace it would be. I'd be a buyer. I don't know if I'd be a seller.
Me
I'd be a
too. Me
buyer.
too. Me too. I thought it would never happen in my life.
You literally just got one-on-one mentorship from the man himself. And
It's
again,
insane.
I'm long. I'm buying calls on that.
Oh yeah,
it's,
that's
it's
insane.
pretty
Thank you,
awesome.
I. Yeah, I appreciate you, man.
Oh, I love that we all get to go back and listen to that piece right there.
Right?
Wow, it's kind of awesome actually. And I know CB's got to just be floating on cloud nine right now. He just had an experience. I think all of us would be I'm pretty sure anybody would love what just happened. That is a one-on-one mentorship response, identifying clearly pain points of an individual trader and ICT coming in and giving you a high five, telling you to sit down in the chair, telling you to, lay down, cross your hands across your chest, close your eyes, and listen, because you're about to go to school. I'm excited that you get to go back and listen to this. That's the beautiful part. Keeping the conversation going. I'm going to try one more time. I say one more time. I'm going to bring Batman because I like Batman. He gets really excited in the conversation. We've had him a couple times. Batman, I want you to think. I want you to meditate. I'm coming back to you in 1 second. I'm going to go to Tommy because he's new, and Greenhorn. But I want to come back to you, Batman. So I want you to really be meditating on your thoughts. I know you're excited and you've had a couple opportunities talking with Michael, and we love you for it, buddy. So keeping the conversation going, keeping it flowing. Greenhorn, you're up next. You have a question for Michael?
Oh, I don't have a question, dude, but what I learned today.
Oh, yes, but feel free.
Um,
What did you learn? That's awesome.
yeah, let's start with that. So the RTH gap is a bias, and then obviously the two clean levels, and then before the market at 7 o'clock a.m. Anchoring that from your low to your high and what direction it moves in. As a beginner, what he calls a yawner. As a beginner, yeah, that's me. Learning structure. So there were other things I learned as well. Was did it not, or did it work to weather the storm, and where to put your stop loss, your stop for your first candle on your FVG, FVG. Yeah. So that was it from me at the moment. But yeah, that's what I've gathered from it. Yeah.
Beautiful, mate. Thank you for coming up. Thank you for contributing. Thank you for your 2 cents. We're going to go to Tommy quickly and then Batman. Tommy, I got Trader Adam coming up after that. Interested to see if you guys have a question. I mean, we've had some really good kind of uncharted territory with very intimate response coming from Michael to the trader. Tommy, you got a question for us? You got thoughts, 2 cents?
I do. What's going on, kid? How you doing?
I'm doing pretty great, brother. How about yourself?
Good. I've been tuning in for a couple years and trying to build up the courage to finally get the speaker tag because I get super nervous talking in front of a bunch of people, but
We
trying to
understand.
step out of my comfort zone.
I love it. I love it. We appreciate when the introverted have their opportunity in the sun as well, being a little extroverted. So,
Yes,
in
sir.
our mentor being introverted, I'm his extroverted version, right? So I'm the loud, boisterous,
Yes.
and he's very reserved, Mr. Rogers, right? So most of the time. So nice. What do you got for us, buddy?
Cool. So I've been trading about 6 years, ICT for 3. I'm from Ohio. My model is I use the one trading setup for life for my liquidity purposes, and then narrative and use market maker models for my framework, my entries off of fair value gaps and order blocks. And I've been honing in ever since the October 18th live stream lecture about um, using the daily quadrant levels on Wix, and of course, I've applied it to opening range gaps, new week opening gaps, and it's really been just super enlightening on just waiting for your PD arrays and how they kind of build in with the framework of the market maker models. You can literally get to the point, and what I've found is I'm anticipating. I'm not like reacting to where the fair value gaps are forming, but I'm actually getting to a point where I'm able to anticipate where the gaps in the order blocks are going to form. And I just wanted to ask, since I have the opportunity here now, is I've placed more of an emphasis, and I feel like it kind of aligns with the lesson that we got today because I'm using the opening range gaps and previous day opening range gaps and those quadrant levels. And we kind of spoke about that today in the lecture as far as like, again, liquidity purposes. But um, I wanted to know if placing a bigger emphasis on the midpoints of these quadrant levels using the wicks, the new week opening gaps, new day opening gaps, opening range gaps, if the midpoints of these and trading the PD arrays that form over top of those is if there's a greater emphasis on those PD arrays and if there's maybe some other, I don't know, kind of sauce you can kind of give pertaining to the midpoints, because personally what I've found is I keep a journal of all my winning trades in one space, and I feel like my best trades come from the PD arrays that overlap those midpoints on those given levels. So that was just my what I wanted to know is if there's a greater emphasis on that.
That's a very good question, matter of fact. And if you've been with me for a length of time, can you hear me, by the way?
Yes, sir.
Am I
Yeah,
okay?
we can hear you great, brother.
Okay. So the idea of the consequent encouragement of a wick or inefficiency, and or if it's an order block, the mean threshold. Think about it like this. If something is bearish in our community and when we're watching price action, if it trades up into a PD array, if it trades up into an inefficiency, if it trades up into an order block, what is the common denominator? We want to measure its willingness to stay when we're bearish below that mean threshold, if it's an order block, or at or below the consequent encouragement of an inefficiency or a wick. What this is actually defining is the highest high and the lowest low. And if you know what you're looking for, you can get the perfect entry on a real turtle soup, rather. You'll be able to enter in on a very low. For instance, let's consider. Look at your 9:48 a.m. 1 minute micro E-mini Nasdaq. Now, just so you guys know, I'm going to stay with the micro because I know I'm influencing people. So if I'm using a micro contract chart, a lot of the guys won't feel so silly about doing it themselves. So I'm trying to really push this measure of personal responsibility and also risk. But if you look at the 9:48 a.m. candlestick, and it's a 1 minute candlestick, we have a wick. It's a discount wick. And the close on that candlestick comes in at 25,262 and 3/4 or 0.75. The low comes in at 25,251 and 1/4 or 0.25. If you measure that with your fib, put that Fibonacci on it, you're going to get a consequent encroachment level of 25,257 even. Notice that the low on the very next candle at 9:49, that candlestick's low comes in at 25,255 and 3/4. That's one tick away from the eighth at 0.625. If you put that in your fib, it fails to get there. So is that bullish or bearish? It's bullish. Why? Because the body never even touches on candlestick number, candlestick at 9:49 a.m. Eastern time. The low fails to get to an eighth. The body's never even touched the midpoint or consequent encroachment, and it goes right back above 9:48's candlesticks open. So it's a shift. So that opening price at 9:48 becomes what? Change in state delivery. Look at the candlestick at 9:50. What did it do? It opened, trade down consequent. I'm not consequent encroachment, to change in state of delivery, which is the opening price at 9:48. Then you get a price run as you would expect if it's algorithmic. If it's really going to be algorithmic, you should start seeing displacement to the upside, and it runs. Now go back to your question: consequent encroachment, midpoints, and all that stuff. You can measure real accumulation and distribution when prices trade in extremes by how it reacts, or if it even engages at all at these midpoints. If you're bullish, if you're anticipating bullishness, and why would you anticipate bullishness here? You have a low at 9:42 a.m. that we pierced at 9:48. So that's potential. You're in territory of what? Turtle soup. So if you look at my examples I've done over the years where I'm actually live trading and doing entries and really, really tight entries, many times I'm using these wicks. When I tried to teach this concept and calling it as a wick, it caused a lot of confusion, referring to it as a gap. But it's the same premise. It's not a static range like a candlestick body is. It's something better explored on a lower time frames. By that, I mean, if you look at the wick, whether it be a premium wick above a candlestick or a discount wick below a candlestick, the entirety of that range that defines what the wick is, if you look at lower time frame charts, you're going to have a whole new universe to explore with microstructure. It's so beautifully done on 5-second, 15-second, 30-second charts. Like it's like unbelievably precise. But you frame this idea on whether you think the market's bullish or bearish. So to answer your question, there is absolutely a large degree of importance and significance attributed to consequent encroachments or mean thresholds for order blocks. It helps with many things. It helps with timing. You'll get some of the best entries that you'll ever see in trading. You'll also know how to better define your risk and where to place your stop loss orders. You'll also know when to anticipate a turtle soup changing direction, and then defining how you can use, for instance, like here, pyramiding a new entry using the change in state of delivery on the opening price at 9:48 a.m.'s candle. But it's all contingent upon how it reacted off of the consequent encroachment level at 25,257 even for the 9:48 discount wick. So these are things that I encourage all of you as students to not just say, okay, I see a wick there. How many times have you spent going through your chart from the previous session or day and go through it and say, okay, here's where the wick was here on that, and measure that, and what was the effects of price action after it created the wick? How many times did it go down to 1/4 of the wick, half of the wick, 3/4 of the wick? How many times does the wick get pierced and taken out with another lower wick, but then does what you expected it to do, go higher or lower? You'll overcome a fear of, because this is the first fear that creeped in to me when I was thinking about this. I'm thinking, okay, I have to be able to represent this phenomenon I'm noticing in a way where it's visible, where I can say, okay, it's now the same stage that this happened the last time. And it was always inside these wicks. So by having an understanding of noticing the wick and paying a particular attention to them, you have to explore inside of them. And if a market is bullish, okay, SmartMoneyConcepts, ICT Concepts, me, Michael, the way I define order flow being bullish is everything that would constitute something that would be support in nature, a discount sensitivity, something that's going to be a discount PD array, something that's going to keep price from going any lower, and it should react bullishly higher. It's going to operate in its upper half. It will not explore in its lower half. So what does that by definition highlight? The midpoint consequent encouragement or mean threshold. So there's a huge, huge mine to explore in there. And I have yet to exhaust the information I can get from these things when I do it. And I've been doing it for 34 years.
Huge midpoints. I mean, Michael, that's huge. I mean, in my opinion, that's huge. Mean threshold, so important for the trader. So important. Wonderful, wonderful. Tommy, did we answer your question?
Yeah, thank you, Michael. Appreciate it.
These quadrants are actually a framework, like that's where you can find your PDRA matrix inside.
And Tommy, you referenced what lecture was that again? It was October 18th, you said?
Yes, October 18th. And then the follow-up,
Would you mind
Trader
posting
Roundup.
that in the chat for me, pretty please?
Yeah, the Trader Roundup that we did following that too was just absolutely fucking fire. So I just
Oh
want to point that out.
boy, the adjunct coming in. We like it. We like the adjunct spaces that you, the listener, get to engage with the actual information, kind of like today. We love that. And Tommy's going to go ahead and post in the comments both. Pretty please, Tommy, if you wouldn't mind making it a point to cite both the Trader Roundup as well as the YouTube episode, pretty please. And then we will continue to share that. And I will also mention, pretty please, give us a like, give us a follow, give us a share, pretty please. We will be doing Trader Roundup following the lectures of Michael, ICT, and if and when he has an opportunity to engage or to answer questions, he's here doing it today. So, some pretty awesome stuff, and you, the listener, get to engage and ask questions. Synapse X, I saw you had your hand up. Who else? There are a few folks here, but Synapse, if you wouldn't mind, go ahead. Do you have a question? And Batman, yes, I
Yeah,
got you too, Batman. I know you're coming. You're coming, buddy. Go ahead, bud.
yeah. Hello, people. Thank you, Kate. Thank you so much for this opportunity. Man, I would kill for this opportunity. I know. It's a fight club. I won't take as much time from your precious time. Hello, Michael. Hello, beautiful people in this space. So I will begin right away. Michael, I guess it's the only way. It's the only way to approach this problem that I have. I have been obsessing for the past 2 years about the concepts that you present. It's changed my life. It opened way bigger horizons, and the only thing that I could not actually address is myself. I mastered everything that you taught technically, PD arrays, setups, high the day, low the day, turtle soups, MMXMs. You can see in my profile now I could not transition from demo execution to live execution. Whatever I try to buy, even a funded account, I feel like I have a Robin's Cup every day, every session. I could not like control myself and take it easy. Even in my journals, I write down that I have no hurry, I have no urgency, calm down, and I found that I see price very well in that engagement, in that idea. It's in my head. I want to tell you that I have an ADHD, kind of obsessive. I want to take out this opportunity. So please, pretty please, this is my only question. Thank you, Kate. Thank you so much. I am forever in your gratitude. I am studying the machine learning and AI to automate these setups, but I want to kind of engage this to subdue myself. What can you say in this realm? And thank you so much. You changed my life. Thank you.
I want to make sure. I think the question was, how can you transition from demo to live trading, and you keep having hardships when you try to do it? Is that what the question was?
Yes, and I have so many plethora of setups. I could not choose one. I feel the pressure in engaging real-time markets. This is my main problem. I could not choose one model. The thing is, I mastered everything. It's not technical. It's psychological. This is my main problem. Yeah.
Okay, so this is a
Thank you.
reoccurring thing too. You're welcome. It's a reoccurring theme in the comment section of my videos, where students will say, "Look, I see what you do. I see other students do what you teach. I see it in hindsight, but I get mad when you come out and you teach something new because I don't want to not explore that. I feel like I'm going to be better at this with the next thing that you teach, and I don't feel confident to stick with one thing because you always keep something new coming out. And I want you to think about what I taught today. Okay, there was nothing new in terms of a PD array. The only thing I did was structure it in such a way where it allows you to look for very simple things. If it's not obvious in a chart, if you can't determine where the buy side is and the sell side is, then you shouldn't be trading at all. If you only know one side of the equation,